From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 22nd, 2016. In just a moment, we're going to be taking a look at the EURUSD, the euro versus the US dollar for today's trade analysis. But first, I want to recap a couple of the trade suggestions made over the past few days and some of the opportunities that we have seen from the live trade room and the morning analysis videos. First off, important to note that we do have some Canadian news at 8:30 a.m. Eastern U.S. time, about 45 minutes from the recording of this video. You'll want to pay attention to that. We have seen quite a bit of volatility and movement on the Canadian pair, specifically the U.S. Canadian, dropping significantly with the sharp rise in oil that we saw yesterday. Between oil, the ECB, and a lot of information yesterday, quite a wild market that we saw, and the market changing a little bit from the way we expected it to go yesterday. Of course, yesterday's morning analysis video, the AUDUSD, we were looking to sell on a rally into resistance, where clearly there was resistance. We were looking at 69.20, 69.40, the gold or yellow shaded area down here at the bottom of the chart. The last 3 days had held as resistance. We saw much support here, historical support low on the left-hand side of the chart around the yellow shaded area. So there was significant reasoning for the resistance that we expected at the yellow shaded area. Now, the market doesn't always do what you expect it to, so that's a good time to evaluate your risk strategy, your risk management strategy, because it's important. If you're going to be a sustainable trader in the market, you want to have a good risk management strategy, keeping your trade sizes to a minimum, your leverage sizes to a minimum, and your stop losses to an appropriate level, that if the market doesn't do what you expect it to do, and it's going to be that way sometimes, that you get out and you move on to the next trading opportunity. And as we can see, we did go short here on the Australian dollar yesterday into the yellow shaded area. Market had a different idea with the rally in oil and the Eurozone information. We did see the rally here on the Australian dollar pushing through the yellow zone, taking us out at a small stop loss, appropriate managed stop loss, and now we see it continue to pressure higher. So it's a good thing we got out. Otherwise, it would have been a massive loss if we didn't get out at an appropriate risk level for the currency pair. So that's always important to evaluate your risk when you're getting into a trade. If it had gone down, of course, we've seen profit, but the market had a different idea. A little bit of a change in the overall picture right now. We'll have to wait and see. I don't have any new trade calls today on this pair, but we'll have to wait and see if this is going to be a sustained move or is it just a short-term reaction to news and current information that we're seeing in the market. So we'll continue to watch the Australian dollar. All right, that goes to say for many currency pairs, of course, we've seen a little bit of a change. Even the US yen making a significant rally over the past couple of days, now back into the 118s again, pushing back higher. The question is, are we going to see a breakout of this period of congestion inside the black box? If it breaks above the green zone, we could see a change in the overall sentiment and trend here for this currency pair. USCAD, as I mentioned, the strong move in oil has caused this one to break down significantly. That significant move that we haven't seen in months and several months. We're going all the way back to September and October where we saw this little bit of a dip, but even that dip there wasn't as dramatic as we saw yesterday. That's a significant move that we saw yesterday. So definitely a significant correction. I don't have a new trade call here today. I don't want to fight this bearish momentum. It's like jumping on a speeding train going by you at 100 miles an hour. You don't want to jump on a speeding train going by you at 100 miles an hour. Wait for it to slow down and give us a better opportunity to get into the trade. GBP USD taking a strides higher today. Something new that we haven't seen in quite a long time. It's been a significant fall, making strides higher. Again, is this a real trend change or is just a little bit of a correction or pullback before returning in the direction of the downtrend? We don't know that yet, and there's no real signs or evidence to that currently on the chart. So we'll definitely keep an eye on that currency pair. Pretty wild for both the U.S. franc yesterday and the euro dollar, both of them moving in both directions significantly yesterday after the ECB news we saw, and then we did get a rally and then a fall again, so pretty significant. But I think the overall sentiment has stayed the same, and I think this is one we can really have some confidence in that. The overall sentiment is still bullish for the dollar, bearish for the euro against the dollar here, and so we would still expect to be selling this currency pair overall for the euro dollar. We're stuck inside this black box. Let's go ahead and zoom it in a little bit here inside that black box. You can see we've just been stuck in there. Yesterday we saw an attempt after the ECB pressuring lower, attempting to break 0.800. A lot of people probably got stuck in that, thinking it was going to go short, and then it turned right back around and went back up. In the trade room, we discussed looking for an open and close under the green zone to give us confidence that it was going to stay underneath there. So that should have kept you out if you were looking for that continuation. That's what we need to see. We need to see an open and close underneath this green shaded area. Until we see that, we see these false breakouts, these spikes. Even at the orange shaded area, look, 1, 2, 3 times we saw spikes, false breakouts, turns right back below. So what's going to give us confidence? It's an open and close outside this black box. That's going to give us confidence in continuation, lower or higher, but that's what's going to give us confidence. The red trend line, the blue trend line, we're in a downward channel. I would suspect we're still continuing to focus our efforts into the downside. That's selling rallies to resistance or breaks of support. Let's go ahead and take it down to the 4-hour time frame. Take a look at that. What a wild day. The fall, the rally back to the yellow shaded area and into the close to the 0.900 level again. And then right back down here into the 0.800 level again. So quite a wild day. If you tried to get short here and didn't wait for that open and close under the green zone, it was quite ugly as it turned back into the yellow shaded area. So hopefully you didn't do that because it didn't open and close underneath the green shaded area. If you took a short at the yellow zone, now you're back into profit. You should be protecting that profit. If you didn't, I think it's a waiting point. You need to either rally back, maybe even to the yellow shaded area again, back towards the upper 0.800s, or I think the next thing we're looking for here for the euro dollar is a significant open and close that we haven't seen in quite a long time. An open and close underneath the 0.815, 0.800 level, and then I think we can look for that tumble back down here towards the blue shaded area at the bottom of the chart. That's the direction I'm focused on. Selling rallies to resistance, breaks of the support level about 0.800, 0.815, looking for the continuation lower for the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.